So what's up, everybody? Wanted to do a video of just pretty much typical vlogging style, straight education. I decided to start transition over to more videos like this to see how it does. But despite that, let's talk a little bit about my journey last month, which is the month of August. We're in September now of me recording this. Honestly, I would say August has been actually one of my best months since 6 years of trading. I've been extremely locked in and just really mastering and focusing and trading just one asset. And I see that me doing that really helped out a lot with my mental, the way I handle myself in and out of a trade, and most importantly, the stress. I used to trade multiple trades back then where I'm like locking in on like 4 to 5 different trades. Like I would focus on multiple trades, and I just realized that it wasn't anything for me. So like last month we did about 60K total of just trading oil. One other asset that I do like trading, actually, as you see, probably came, but I'm currently in a trade now, and we're down like 15K. But this account is literally at 6 figures now, and we started it with $55,000. And I mean, I've done multiple, and I still do multiple videos, and I'm gonna be showing you guys how I did what I did, and show you the positions, and even show you some of the setups that we posted in my Discord as well, because a lot of these trades that we were calling has literally been recorded as well. So the fact that I'm not the only one eating is really dope to me, and I like it. You know, I feel like trading, man, is just something, freedom that you can get. And the beauty of trading is it's still a 9 to 5 job. Like I still wake up every morning like at 7 a.m. still trying to figure out things, and the way that I trade oil and even now 30 is I have to trade at these certain times in order for me to really make profit. So that's the thing. I'm gonna be showing you guys some of these trades and the way that I handle myself in and out of the trades. But the most important thing is knowing the setup before the setup occurs, and knowing how to mentally find the setup. And that's what we're gonna do. So I'm gonna break that down. But first, before I do that, I'm gonna go to the gym. You guys don't need to see that. We'll come back. When I come back, I'll record this setup video, and make sure you like, comment, and subscribe. Let's get to it. Okay, so I want to show you the trades, US oil that we have here, and then we have the 11K trades for US 30. So I want to go into US 30 first and show you this setup particularly, and how I look for these setups all the time for 30, and then kind of how I look for the setups for oil. So when I'm looking at US 30, the first thing I like to analyze is the 1 hour time frame, first to know where we're at overall. I trade something called Elliott wave theory, but I use a certain sector in Elliott wave theory. And what that is called the zigzag pattern. And what a zigzag pattern is basically where you get 3 legs in one market move. And that basically is when you get your very first leg, this leg is known as a trend. And then the second leg is known as a pullback. And then the third leg is known as a trend. What traders really don't know is that you can actually measure how many times the move will pull before it continues. Meaning there's a theory inside of Elliott wave called the corrective waves, where you have a measure of 3 to 5 legs. And a lot of traders sometimes will get in early and not realize that in this pullback, you still need to wait for 3 pushes before it continues to do its next trend move. And if we go into US 30, there's multiple places happening now. So I'm gonna show you where on a 1 hour scale, your goal is to always look for equal highs and or equal lows, whether if this is a diagonal or a straight line. This is going to be the easiest way to visualize the corrective wave. And the reason why you want to visualize the corrective wave is because you want to know how far the C leg, which is the next continuation, is going to go. I literally have students that gets in the market too late and realize like, yo, I shouldn't have got in it, but don't understand the logic behind when the market should be ending before it does its next major or minor reversal. So if we look at the market now, I see that we have this equal, equal, and equal. So all I'm gonna do is just try to connect the lines and I'm gonna just see where they meet the most. And as you see, this is pretty much what it looks like. Now I'm gonna go down below and I'm gonna essentially do the same thing. Now I'm gonna end up drawing this diagonal because I just see that we have this diagonal pattern. Rather, if I draw it like this or like this is a complete entire corrective wave, which is the B leg. It might not look like this. It actually looks something more like this, but this is the B leg. And just to prove to you guys, when I said that every corrective wave is measured off of 3 to 5 legs, this is what I mean. When you're dealing with an uptrend, you have to first measure your very first leg, which is known as leg A, going down. This move right here became leg A, which is the first leg. And then how you measure your second leg is it must correct or connect with the trend in order for it to count as a second leg, which is this leg here. And as you see, the third leg is this leg here. So I see that this entire play is all corrective. And then if I was to show you now the ABC leg, this is what it will look like. All of this is an A leg. And why am I measuring this as my A leg? That is simply because this move is the trend. So since this is the trend, I now need to wait on a bigger and corrective wave known as a pullback. And that is all it is here. Notice immediately after this bigger corrective wave was done, the bigger spike happened. This is today. We actually got in the trade today with 30 because of this same setup. So I understand on a 1 hour scale what's happening. I know that either we're in a corrective wave or we completed the final leg in the corrective wave to head up. And also now the next thing I need to identify on a 1 hour or even the 4 hour scale is how far will this continue to head up? Because I don't want to get in this late. I want to make sure I'm in it at the right time. And then when I go on a smaller scale, like a 5-minute time frame, I now know I can keep scalping the market until it gets to my 1 hour P and H zone level. And the P and H zone level is created like this. We take out our Fibonacci and we draw it from the beginning of the trend to the end of that trend, which is down here, to the end, which is up here. And all I'm doing is looking for that P and H, which is the potential new high in between these two levels of my Fibonacci, which is the negative 0.27, the negative 0.618. Now, after I do this, the next thing I do is I look left. I look to see if there's any confluence that it is aligning with this level, because 10 times out of 10, you're either going to get an equal high here or you're going to get support here, resistance, demand, supply. If you spot that inside this box, that is the valid levels you should only be paying attention to. Don't worry about anything outside the box besides this. So if we look left, we see there is nothing looking left because this is creating new history as it goes on. And something like a commodity like gold, oil, 30, NASDAQ, S&P does this. And this is why the Fibonacci is the most powerful tool for something like this, because you will know where to actually catch the pullback before it actually really happens. So now that I understand the game, I'm going to remove my fibs to keep my charts clean, and we're going to jump straight on the 5-minute time frame. Now from the 5-minute time frame, the next important thing I'm looking for is equal lows. It is usually hard to find it on a smaller scale like the 5-minute. So if it is impossible for you to find equal lows, I suggest going on a 15-minute scale. It eliminates less noise. All I'm looking for is equal lows or equal highs. And this can be in a diagonal way, something like this, or it can be straight, something like this. What we're trying to do is find these equal lows, because we really want to pay attention to is waiting on market to sweep these lows out. This is known as a spring, where if you get an equal low and an equal low, you will then get a spring. That is all I look for when trading 30. And even if you want to trade gold, this is the exact entry model to follow. When market creates that, I wait on it to pull up and then push right back down to create what we call a test. Let me show you what a prime example looks like of the spring and the test. So looking at this chart, it is called accumulation schematic or Wyckoff events and phases. This move that you see from the secondary climax, secondary test, Secondary test in phase B is the equal lows that we're looking for. As you see, this is a prime example of spotting this out early. When the moment we get this, we then wait for it to grab it. That is known as the spring. Once the spring happens, we then wait for it to test. And as you see, this test had happened here, and then boom, up we go. That same concept is exactly what I'm looking for, even if the market was vice versa, going down. So seeing that we got that here, this play became my buy setup here, and we exited out right here. This was a play that we called today. And then yesterday, same thing happened. We seen equals, we got the spring, and then eventually it decided to take its time, but it did go up. You do get these setups quite often. And then as you see here, we also had the same play here. We had the spring, the test, and this was another trade we took. So if I go into my other example, you see that we have prime examples of some of the trades we were catching from these plays. Now, if you look out, you see that I have my zigzags drawn out consistently. Let me remove my trading session so you can really see it better. I have consistent zigzag patterns going on because once again, if you draw out your fibs from the A to the end of A, you see that we perfectly hit this and then we went right back down. So this happens quite often where you get your A, which is the trend, your pull, which is the B, known as 3 waves inside the B leg. If I move this to the side, you see that we have 1, 2, 3, and then it goes right back up. Same thing applies here. We have 1, 2, 3, and then it goes up. Same thing applies here. 1, 2, 3, and then it goes up. This happens consistently in the market every second of the day. And this is pretty much how I trade 30 and also oil. Regardless of your account size, this is effective. If you're trading $1,000, $5,000, even $100 account, you can effectively make a lot of money with just this basic concept. Now, if you guys are watching this still, make sure you comment the word Elliott. That lets me know that you want more videos like this, and that lets me know that you are watching these videos all the way through. Other than that, if you want to get more in depth what we got going on in our community, you can tap into tradewithsolo.com, and that is where we do more exclusive breakdowns and strategy breakdowns of gold, oil, 30, and so forth. Other than that, I appreciate you, your boy Solo, checking out. Peace.